Hello everyone, let's have a look at the market snapshot. Where are the markets headed? If we look at the India participation, the advances have been close to 220 to 30 odd against the declines of 270 to 80. The new leadership, again, the new highs are not getting formed in the market, and that's obviously not a very good sign. It's very limited. If we see the count remains around about 10 to 10, 15, 20 in Nifty 500, whereas the new lows are formidable, almost 480, 490 odd. If we look at the breadth, it's again a very mixed sort of breadth, above 20, close to 200 stocks, above 50, around 270 to 80 odd, above 200, 230 to 50 odd. If we look at the overall trend of the Indian market, the Nifty 50 remains bearish, trading below 50 MA. The participation is weak and the breadth is weak too. So like I'll try to explain you what I mean by participation. Participation basically means the advances to declines, and obviously that has been weak. And the breadth is number of stocks trading above 50 MA, and basis that also it looks weak. Coming to Nifty 500, again it is bearish, trading below 50 MA. The participation here remains neutral, which is better compared to what is happening at Nifty 50, and the breadth is mixed, again, which is better than what is happening at Nifty 50, the larger index. US participation, the advances are close to 220, 230 against the declines of 230 to 40. The leadership, again, new highs not getting formed, a lot many new lows, and the breadth is above 220 MA, close to 270 odd stocks, above 50, around 250 stocks above 200 against 270 to 80. So if we look at the overall trend of the US market, the Nasdaq still looks bullish, above trading above 50 MA. The participation is weak and the breadth is neutral. So like if you remember my past 2 3 videos, I have been telling whatever is happening in the US market, like the Nasdaq is forming or S&P 500 is forming higher highs, but somehow the breadth was not supporting. What happens in such scenarios? The crashes are inevitable. What happened yesterday, right? Like there were certain pockets which were fueling the rise of the index, and eventually when the moment the flow of liquidity stopped, the the crash was bad yesterday. So that is why studying the participation of the breadth is very very important. Just looking at a lot of people looking at technical charts believe that price action is everything. It is, but then it needs to be supported. For instance, any growth which is organic will continue to have a sustainable growth. Anything which is inorganic is bound to fail, and that is what is happening in the US market. Coming back to S&P 500, it is bullish, trading above 50 MA. The participation is neutral, breadth remains mixed. Russell 2000, again above 50 MA, participation neutral, breadth is mixed. Amongst the three, the best looking at the moment is S&P 500. That is what I would say. The macro picture, the US 10-year yield is above 50, around 4.5. Obviously, that proves that there is liquidity in the market. But the contradictory figure here comes the dollar. Dollar is rising, which basically means tighter liquidity. The VIX was trading somewhere around 15, 16, and all of a sudden yesterday it was 21.5. It doesn't means that any sort of chaos is happening in the market, but for sure the volatility has increased. BTC, again a very good indicator about where the risk, how's the risk appetite of the investors is. It is bearish, so basically people are not very bullish how things are moving, and gold is bearish too. So if I look at the US 10-year yields, DXY, dollar index, and the BTC, it basically confirms people are not very sure where to put their money. It's a very mixed sort of environment, I guess. There is no clear directions to where we are headed. So yeah, that is what I would say. The final scoreboard, I would say the India looks weak to me, US neutral, although the fall yesterday was little scarier, but then I would say still it remains neutral because it is still respecting all the major uh, EMAs. The macro looks uncertain to me. So my takeaway would be India remains a weak regime with poor participation and breadth. US markets continue to hold above key trend levels, but internal strength remains mixed. The participation and breadth needs to improve in the US market, or else things are not looking very, very good because the strength lies with certain pockets, and the moment withdrawal happens from those certain pockets, the fall could be major, I would say, in the US markets. The macro conditions remain restrictive as the yields and the dollar stayed elevated. I would say, again, be very selective about your choices wherever you want to put your exposure. And I would say, not a very ideal environment to be very, very bullish or aggressive in the market. Take risks, take conservative bets, and play out your game. That's what I would say. I hope you guys find this useful. Thank you so much and have a good one.